November the 10th, SoFi Technologies reported above consensus third quarter earnings. Solid financial results came alongside an increase in the company's member base, pushing SoFi as high as $24 per share in the post-earnings action. But since then, the stock keeps dipping daily. Hi folks, in this video we will have a look at the reasons why SoFi is a buy in my opinion, as well what might be the reasons not to buy, why the stock is dropping and what I will do in the current situation. You see, this video is packed with a lot of, I hope, for you interesting and helpful updates. So better getting started right now. Let's start with the 4 reasons why in my opinion SoFi is a buy, and that hasn't changed a bit. First, SoFi reported EPS that topped consensus by a penny and revenue that beat by 21.5 million. Third quarter was marked by the 5th consecutive time that SoFi delivered positive EBITDA, something that is not all that common among companies that have been publicly traded for only a few months. And as far as business highlights, year-over-year member growth of 69% stood out, as did the addition of 377,000 new members. Regarding guidance, the management team expects growth acceleration in Q4 with revenues up between 49 and 55% and an EBITDA of $2 million to $5 million. This was yet another data point supporting the growth story that we have been looking for, folks. Second, as I stated in my video where I explained the mode of SoFi compared to PayPal and Square, the Galileo growth potential. Galileo is a global payment processing platform that SoFi acquired in a $1.2 billion deal. Since Q1 of 2019, Galileo accounts have been growing sharply at a pace of 80% in Q3 and have recently reached 89 million accounts. And through Galileo, SoFi is betting on a future expansion in Latin America and Mexico, markets in which fintech platforms are still in their early ages. Third point, the Bankcharter approval. In my video, where I predicted that the Bankcharter would be announced the 1st of November, and obviously I was wrong there, but I said as well that with the change to a controller application, there are specific time constraints. Which means from the date of the application, the OCC has 6 months to review it, which would be January. So I still believe that in latest in January we will have an answer. But with the recent announcement from the Biden administration to make Saule Omarova head of the OCC, things could change dramatically. But that I will explain later on and a bit more detailed, as this would really have a huge impact for the whole banking industry and for everyone living in the US, having a bank account as well as in regards of the crypto space. And the fourth point why I think SoFi will do better in the future, I explain it as well in my SoFi analysis video. And in case you want to check it out, I will link it after the end of this one. But if you haven't been following SoFi, you've probably heard a lot about its flywheel strategy, which involves getting customers to use multiple products the company offers. When SoFi can get members from its base of nearly 3 million to purchase 2 or more financial products, they become a lot more profitable to the bank because there is no customer acquisition cost for that second product. And the financial service division is key to bringing customers onto this flywheel. SoFi at the end of Q3 had nearly 1.2 million cash management accounts, more than 1.2 million SoFi Invest accounts, and more than 65,000 credit card accounts. CEO Anthony Noto said on the Q3 earnings call that these 3 products accounted for 73% of total cross-selling in the quarter. When a member from SoFi Money, Invest or credit card takes out a loan with SoFi, the value of that customer jumps to more than $1,600, twice that of a customer who solely took out a loan. And CFO Chris Lapointe also said that if you add SoFi Relay to the mix, that would bring cross-selling from the financial services division to nearly 85% of total cross-selling. SoFi Relay allows members to manage their credit scores and all their financial accounts in one place. It doesn't generate revenue, but as Noto said on the earnings call, it gives SoFi a lot of data on its members by showing it how many credit cards they have, for example, or what they might be paying on an existing personal loan. SoFi can then use this data to target customers and see if they want to refinance their credit card or personal loan with SoFi at a better rate. Or if the company sees a high cash balance in a money account, it can offer a financial planning session which leads to that member opening a broker account. And that, ladies and gentlemen, is how you create more profit and growth. So that were the reasons why to buy SoFi, but I want to tell you as well what complications we could face. First point, money gets worth and worth less due to inflation, right? And the result is that loans get cheaper and cheaper, and that isn't really good for SoFi and any other lending company. And the biggest threat I see, and what I mentioned before, is the Biden administration's nomination to make Saule Omarova the head of the OCC. The problem is that this lady, or I should better say comrade, is anti-crypto, anti-community bank, means in her paper, The People's Ledger, she states, for example, and now better sit down folks, money could be helicopter dropped into people's accounts as a stimulus. It could be given on a progressive scale with more money for people with lower incomes. Money could be given conditionally. The money is only valid if used toward government approved ends. But folks, she says as well, the Fed should have the power to remove money from people's accounts if monetary contraction is desired due to inflation or other causes. So, she believes that loans should be funded directly from the government and not by banks using customer deposits. Hence, her appointment would not be good for the fintech sector nor for the crypto space. So let's hope the Bankcharter is approved before that happens. But let me know in the comments below what you think about Comrade Omarova. Would be really interesting to read. So now you know my concerns about SoFi's future. Let's have a look why the share price went down. Well, for sure you have read that Chamath has sold 5.3 million shares and now that SoftBank sold 22.5 million shares. Folks, that is all bull news to make you confused and to spread FUD, fear, uncertainty and doubt, as these sales were already revealed on November the 15th, where SoFi announced secondary offering of 50 million shares of its common stock. And here you can see who sold how much. Means all this recent sell news are old. So don't get confused here. What you have to look out for is that the lockup for 16% of the shares expires on the 24th of November and the warrant redemption is on the December the 6th. So now that we have a complete overview, what would be my approach? Well, even with an analyst rating of 5 buys and 1 hold and an average price target of $26.33, we can't know how far SoFi can drop. Therefore, either you go high risk and limit this risk by buying smaller amounts step by step, or you wait for a clear uptrend. But as always, that is my opinion on how I would do it. Anyway, let me know in the comments below what you guys think, why SoFi keeps dropping and what you will do. So, I hope you found this video useful and it helped you a bit. If so, please give it a thumbs up as the dang algorithm likes the stuff. That's it for today. Thanks for watching and as always, stay focused and don't get greedy. See you next time.